What's up? What's up? What's up, everyone? This is Jeremiah Davis, aka the Funding Coach, coming to you with Black Label Friday. I hope everyone had a productive and prosperous week. And as an entrepreneur, if you're not an entrepreneur, you need to be an entrepreneur. And for those of you who don't know, Black Label CRM is a white label business credit and business funding automated software. And we've gotten a whole lot of new features that we're adding to the software that's going to change the game forever. So I'm going to talk a little bit about those new features and how all this works together, because there's a lot of misinformation out there on the public, on social media. A lot of people prophesying and claiming that they can get you this and that and the other with business credit. But the truth of the matter is a lot more complicated. And having the right tools and the right information, you can achieve your business goals. And the number one business goals is to generate revenue. Okay, but to generate revenue, you need to have access to cash and credit. So we put all the pieces together in the software to for one purpose. One purpose is to get you or your clients from A to Z, right? Get them to the point where they have access to the resources they need, meaning resources to cash, not just any cash, but quality, premium, low interest, monthly, business term, SBA, corporate financing, these type of funding products and lines of credit and credit cards that when things come up, you're not, depleting your operating capital to trying to, stop some crisis, and as entrepreneurs, we all know that on a day-to-day, week-to-week, month-to-month time frame, there are things that pop up and become very expensive. Or if you want to expand, you want to hire more people, you need to buy more products, you need to get another location, buy more equipment. All these things take credit and capital and cash. And for an entrepreneur or small business owner, you need to have that on the ready. And it needs to be already accessible when those crises come up so you can pivot, move, and keep moving forward. Okay, and that's the whole concept behind Black Label CRM, is that you're able to facilitate these financial services, whether it be business credit building and access to business funding. So when things do come up, they have those resources. Everybody knows the number one reason businesses fail is lack of credit and capital. Okay, so today's topic is, Black Label CRM has 200 direct lenders in the software. Literally, we put the lenders in the software that you can partner with directly and make 100% commission. Okay, now the whole concept here is for you to be able to service your clients, make money, but also succeed, right? Your client's success is your success. Your success is my success, okay? And we're trying to change the culture of the industry in a way where we're setting ourselves apart from all the other chicken heads, as I like to refer to them, selling half-truths and lies on social media. Because you got to have all the pieces to the puzzle. Banks and creditors and lenders are not, there's no loophole, there's no shortcut, there's no trickery that you can get past the banks. You're not smarter than the bank. That once the bank finds out that this is a scam, they put stopgap measures in place. But we don't even want to go down that route. We want to do things the correct way initially, right? And the correct way to access the premium loan products and lines of credit and vendor accounts with high dollar limits is to follow a step-by-step process, build your business foundation and your finances being having access to those resources um, ongoing. Okay, not just like one a stopgap and then you're done. Because the truth is, the vendors, the creditors, the lenders, they're not in business to help you get uh, an 80 paydex score or intelligence score. They're not in business to um, report your trade lines to business credit bureaus. They're in business and they extend lines of credit or net account, net 30, 60, 120, or 90, 120 day terms or business lines of credit for you to utilize those responsibly to help your business grow, pay it back with a low interest rate, right? And then keep moving forward, right? And you can always tap into that. So having access to, say, 250, $500,000 in business line of credit, right? And that it doesn't cost you anything once you have it, but when you need it, you can draw $100,000 and pay 4 or 5% a draw rate, maybe even down to 3.5 draw rate. Okay, that is very inexpensive money, right? Rather than going with a revenue-based MCA where it's very expensive money, you're looking at 30, 40% interest on those type of funding products that kind of get you into a snowball effect where you're always dipping back into that and you kind of keep digging yourself in the hole. Okay. So having these resources, and I want to preface that the concept is not just to be a loan broker, right? The concept is to be a business financial advisor. And what I mean by that is, yeah, when a business owner comes to me and they need money, and 9 times out of 10, they have to get the expensive money, right? But then I always try to pivot them to building their business credit, accessing, business business lines of credit, getting them the business lines of credit that they need, but also preparing them to get a business term loan, to get an SBA loan, to get corporate only financing. Those are real loan products that businesses can get if they follow the correct protocol. Okay, it's been tested and it works. Okay, but what happens with you is you can be able to get them the first round of funding, upsell them or sell them your live VIP business credit coaching, and then get them a second round of funding. Right now, you become that business owner's hero because you showed them how to pivot and you help them get to a place where when they do need some more financial resources, they come back to you. But as well as they're staying in business longer, they're expanding, they're growing, they're hiring more people. All those things kind of work in tandem, right? And that's so I want you to, not just think about becoming a loan broker, but becoming a business finance advisor where you can help all small businesses or entrepreneurs um, access the right information and the right funding products. Okay, so we have in the software we furnish 20 different business loans, right? And that's a large amount of different funding items. But for each one of those loan products, we have about 10 lenders in each category. So that's the 200, right? And you can, once you get the software, you can log in and you can access those lenders directly. We also have 244 business and personal credit cards in the software. So you can access those, right, and help them have those credit cards in the business name. So what we're going to, or so I'm really excited about, is this lender bidding platform. So we're going to incorporate a whole bunch of different databases, right? Uh, that we can pull the articles of corporation from the Secretary of State, um, EIN history from the IRS, UCC database, so we can see if you have any outstanding loans, default loans, current loans, things of that nature. Importing, 3 bureau FICO 8 credit scores and 2 business credit scores, so we can verify your credit, and then we can assess the business financial blueprint or the business credit foundation, right? Making sure you have the right vendors in place so you can have optimizing your SEO, you're optimizing your all the resources that you need, whether it be a virtual office or a physical office, whether it be the phone lines, website, um, all the business evaluation. Business evaluation is very important that as a business owner, you know what your business is valued at, right? That comes in a very handy when you walk into a bank and ask for a business term loan or a business line of credit, or you're applying for an SBA loan. Having a business, and we have those vendors in the software that you can partner with and make 100% commission, because they'll pay you commission for referring them to people that need their business evaluation. Okay. For example, I'm working on a deal right now for 1.5 million, and the first thing the bank asks for is a business evaluation, right? So we have the resources. I put the client in contact with the person that can do an evaluation of their business. Once they assess the value of their business, then we can go back to the bank and says, okay, the business is worth $7 million, and then the bank is like, okay, well then I think I feel more comfortable loaning you 1.5 million. You see what I'm saying? Okay. Those are the type of things that the Black Label CRM equips you to do, right? So that's the type of stuff you want to have access to and provide that correct information to guide your client down the right path. But remember, it's not one and done. We're just not going to give them this expensive money on the first round of funding, but we want to prepare them, hopefully within the 3 or 4 to 5, 6 months of building their business credit. Then they can qualify for a business term loan, right? But to qualify for a business term loan, they need to have all their business finances in order. Last 2 year tax returns filed. If they owe taxes, they got to be on a payment plan. They need to have all their other financial documents, balance sheets, P&Ls, all those things in order. And a lot of businesses, entrepreneurs, don't have it in order. So when they go apply for these loans, they just automatically get rejected. Okay. Then we also have a method of how to obtain a secure line of credit, business line of credit, but that's the stepping stone to access more unsecured lines of credit. And over the course of those, 3 to 6 months, you could potentially have, if you could afford, say, if you can afford $25,000 secure CD, business CD that reports to the business credit bureaus as a business line of credit. That's how it works, right? Then you go to another financial institution and apply for a business line of credit. They're going to pull your business credit and they're going to see that you already have access to $25,000 line of credit. They're going to more likely be more comfortable extending you another $25,000 line of credit, right? Now you have two for 50. And then if you go to a third bank, it's a good probability that the third bank will say, well, you know what? I wish you would use my line of credit. I'm going to give you a lower draw rate, and I'm going to give you $50,000 because you already have access to $50,000. Now you have access to $100,000 in business lines of credit that you're not paying any money for unless you draw off of it, right? So even that $25,000 you use to secure the first CD, right, is still accessible, right, to you, right? And only time it's going to cost you anything is when you make a draw off of it. All right. So, but you can continue to grow that. And then when you use those lines of credit responsibly, right, as a short funding resource, right? Say I need $20,000, $30,000 for marketing campaign or hiring some more employees or whatever the case may be. Then, once the money is replenished, you put the money back. What they're going to do is increases your lines of your limits on your lines of credit, right? Just like with credit cards, you use them responsibly, they give you higher limits periodically. Same concept is with business lines of credit as well, right? So potentially, right, having good personal credit, having strong, solid business credit, having comparable credit equal to the amount you need, having the 20 items of lending compliance or your business credit foundation, completed, right, puts you in a total different realm of fundability, right, and the business fundability. You need your business to be, bankable and fundable, as we call it, so you can access those premium loan products. Okay. So, what are the 20 different loans that we offer in the software? I'm glad you asked. Um, and I will not be with you guys long today. It is Friday, and I got some other things to do. So, um, so we got business credit cards. We're actually building a platform where as soon as the success scan comes in, if you guys don't know what the success scan is, go back and watch my earlier videos. Our software has unlimited success scans. You can put any business can go do a success scan and get pre-qualified for one or more of the 20 different loan options. Well, we're going to enhance that success scan with all these databases that we're importing, right? And it's not going to cost you guys any extra. We're doing this because it's wise and wise investment to do it. It's going to make the scans more accurate by accessing those databases, UCC, IRS, EIN, Secretary of State, bank rating, things like that, importing the credit reports. Now that the client will have to pay for the MyScore business model, where it pulls in the 3 bureau FICO 8s and the 2 business credit scores. But so the scan is going to automatically collect that data, even download the supporting documents from the Secretary of State, like articles of corporation and things like that, annual reports, all those that we're going to have all that imported into the software in the client portal, all secure, everything. So we're going to be able to collect a good portion, about 50% maybe, of the supporting documents that we need for most of these loan products automatically from a scan. Okay. Um, Okay, so the scan also goes out and checks another 150 other data points that are public record. All business information about the business and the business owner are public record. So we don't need any authorization. We don't need anything like that to access that data because it's already public record. All right. But it's also, once we get that scan, it's going to pre-select. Um, Hopefully, our model is 10 credit cards that are best suited for the client based on that data that we're collecting from the scan, and the software is accessing the databases to enhance the scan. So when that client comes in through a scan and they get a pre-approved for, say, 4 different loan products, we already know that there's a good likelihood that we can deliver on those loans if they can supply all the supporting documents and everything that they provide us is accurate. It's going to greatly enhance it. It's very advanced now as is, but when we import these other databases and have access to bank rating scores, right, we'll be able to say, okay, you got a low 5 bank rating score, you're in good standing with the Secretary of State, your corporation, your EIN's been listed with the IRS for 3 years. We can see that you got 3 years of tax returns filed with the IRS. Okay, now we can go to a business term loan. Can you imagine having a platform that can access all that information in seconds and taking a client into the right funding product day one? You getting paid a commission and then working with that client on a VIP business credit builder where you can outsource the live coaching to an employee. And then when they're ready for the next round of funding in 3 to 6 months, hopefully, that you can get them 100, 200, $300,000 in a business term loan or SBA loan or corporate only financing. What you're going to be able to do with this software, no one else has ever done. Okay, that's why you need to get this, and you need to get it now. So the loans you can actually fulfill. All right, we got business credit cards, we got business lending credit unions, we got SBA loans, we got equipment leasing and financing to purchase new or used equipment. We got revenue-based loans. We got merchant cash advance. We got 401k Rob funders, right? If you got a 401k and you roll it over to your company it becomes an asset of the company that you can borrow against. Okay, those are really popular. Those are really good, right? And it's not based on credit, so you can have bad credit and still get one for your business. and use that money to invest in your business, and then you just put it back because you're just rolling over your 401k from your day job or your corporate job to your company, right? And that's is a set protocol that you have to follow to do that. But if you have a 401k, give me a call. We can talk about it, right? Accounts receivable factoring, purchase order financing, equipment sale lease back. That's if you own equipment outright, right? And that you want to use the collateral to borrow against, right? On that type of funding, you only get 50% LTV. But if you got, $100,000 tractor trailer or heavy equipment or whatever the case may be, and you own it and it appraises for the value, there's banks in the software that will give you a loan using that as collateral. Okay, private lender credit lines. You got private no real estate fix and flip investment property. You got commercial real estate financing, inventory loans, peer-to-peer business lending, which is basically startup or personal loans to start a business. Right, hard asset-based lending. Right, anything you have a hard asset, you can use as collateral. Recurring payments loans. This is if you got an annuity or settlement that you're receiving regular recurring payments to you, you can use as collateral to borrow against. And then the contract-based financing, right? Most of those contract-based financing are government type contracts, but there are lenders that will do contracts that are not government-based. Maybe there's a school district, maybe it's the state, maybe it's just another corporation that is a purchase order type situation. Like you got a product, Macy's got to pick it up, put it on the shelves. They give you a contract. You can use that to borrow against, or it could be, purchase order financing as well. Then we have private bridge financing. Private bridge financing can be used in a number of different ways. It's a set of money that you can use in between financing products. Okay, so if you're right here and you need $20,000 or $50,000 for a couple of months to get to this next stage, and then you can put that money back. And then we got loan note buyers. These are individuals that buy your loans, right, for pennies on a dollar or whatever the case may be, but they need to see value in that, and then you can use that as leverage to get access to more cash or cheaper money, right? Lower interest rates. And then we also have truck and vehicle financing. And there's a lot more, right? Some of you guys know that I just dropped my business funding expert certification course where I cover 30 different business loans in the software. 30 different business loans in the course, right? That the course, there's nothing else out there like it. The business funding expert certification course is 30 business loans, right? In the course, each loan is broken down into individual modules. So I have, I think, 5 SBA loans in there. Yeah, 5, right? I have the real estate. I have, I can tell you all the courses, all the loan types that are in the course. Let me go ahead and get to that. So it's all the ones I just kind of mentioned, right? SBA, revenue based, recurring payments, real estate, purchase order, private lending, lender credit lines, bridge financing, peer-to-peer, merchant cash advance, note buying, inventory, hard assets, equipment sale, lease back, equipment leasing and financing, contract-based, commercial real estate, accounts receivable, 401k. Now, one course, one module is business credit cards, but we cover all the different variations of business credit cards, like PG business credit cards versus no PG business credit cards, and vendor credit, as well as store cards. All right, that's just one course. Then we have your business lending credit unions, your truck and vehicle financing, business term loans, business line of credit. Then we have the SBA, SBA 7A, SBA 504, SBA cap line, and SBA export working capital, and SBA export express loan. we have the ERC loan, then we have the business secure CD line of credit, and we have startup business funding. So those are the 30 different courses, modules, or loan products in the course. Now, what the course is going to teach you, right? First, you're going to have a very, very clear description of the core of the loan product, right? Because that's the most, I think, one of the most important parts. When you hear this term, note buying loan, do you know what it means? Okay, or you're trying to explain it to somebody. Can you explain it accurately to a client or whoever, right? And then we have real life case studies. I mean, they're fictional, but they're real life, right? They don't give you actual business names, business owners, but ABC Manufacturing Company, was explored funding SBA loan. They needed this to this, right? And so we give you that case study so you got a concept, an understanding of how to apply the loan to their appropriate client, right? All loans don't work with all clients. So you need to be able to figure out which loan product fits the client's needs where they're at. Okay. Um, and then after you do the case study, we go into the pros and cons of each loan, right? So you're going to know all the benefits and all the repercussions or consequences of the loan. What's the downside of the type of loan? This is invaluable just as much as the case study and the description, because you can need to educate your client on all those nuances so they can make the best informed decision on the type of loan they want to take. Okay, so that's why it's very vital that you're able to articulate the pros and cons. All right. And then we're going to cover the requirements for the loan and then the most common supporting documents for the loan. Now, I say the most common supporting documents is because that varies based on lender, right? There are some sample, articles, bank statements, ID, yada, 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 right? Those are the basic. But there's some other nuances, right? But those that get even more granular with those supporting documents based on the individual lender, right? One lender might require a document, the other lender doesn't for the same type of loan. So you have a basic understanding of how that particular loan product works and the most common supporting documents. So when you go to a lender and they ask for something that's on the list or that might not be on the list, you understand. Okay, yeah, I understand why they're asking for that. No problem. Get it from the client and keep it moving forward. All right. And then I also in the course cover what the difference is between a loan broker and a direct lender, right? A loan brokers are beneficial, right? I cover the pros and cons of working with a loan broker. I cover the pros and cons working with a direct lender. Working with direct lender is ideal because there's no middleman and you can get potentially a higher commission if the bank charges a higher interest rate. Sometimes you get less commission working with direct lenders. Okay, things you need to look out for. Now, with working with direct lenders, that you need more of them because most direct lenders only work with specific loan products. So if you're offering a wider range of loan products, you're going to need a lot more direct lenders than working with a loan broker. Working with a loan broker, they already have the relationships for a plethora of different business funding options, right? So they already, have that relationship built, so you don't have to go do it yourself. That's going to be beneficial because you got one-stop shop to take all your loan deals to, right? Then when you work with a broker like myself, or we already have a large, a Rolodex full of lenders for every type of scenario or every type of loan and so forth. It's all about having the right resources, okay? Um, and then for the cherry on top, I put my 5-question formula in the course. Now, this is the 5 questions that I've developed over the years, right? 10, 15 years being a loan broker, that when I talk to a client, I'm asking these 5 questions. It's almost second nature for me now. But based on the answers to those questions, and they're yes and no questions, is your credit this? Yes or no? Is it, is your annual income this or this? Yes, no, and so on. So that 5-question formula immediately lets me know which loans by process of elimination based on their answers that I'm left with. Okay, I can check this one off the list because their credit is below 680. I can check this one off the list because their income is below $100,000. I can check this one off the list because they ain't been in business more than 2 years. So now I'm down to just 2 or 3 different loan products, and I only ask 3 or 4 questions, 5 questions to max. Okay, this is going to be that's the I think that is one of the most valuable aspects of the course is being able to ask these questions and immediately know, okay, you're going to qualify for this type of loan based on your answers. Now I need to verify the information and collect the supporting documents for that loan product. So you save yourself a great deal of time by understanding how lending works, right? And then we also, obviously have these broken down into categories. You got your credit base, your asset base, and your equipment, SBA, type of funding. So you understand that these loans fall into this kind of bucket, right? These loans are all credit based. You need a 680 or higher to get these type of loans. All right. All these loans are say SBA loans. All these loans are say revenue based loans. All these loans are say equipment based loans. So you'll have a understanding of how to navigate the business funding arena once you have that basic information of what the loan is contingent on, right? Business term loans is contingent on having good personal credit and good business credit and good financial. SBA loans is contingent on having good personal credit and good business credit and right revenue, as well as access to the money for a down payment. Okay, all right. Equipment-based loans are not credit-based per se, but they do prefer you have a 600 credit score. But with a 600 credit score to get $100,000 worth of equipment, that's not too bad. Okay, but the other caveat, you usually need to have about 15 to 20% of the equipment cost in liquid cash, so you can pay for the related things you need to get that equipment, special license, insurance, things of that nature, as well as being able to make the payments initially until you get the equipment and able to utilize it to generate more revenue. Okay, so all that stuff is in the course. All of it is in the course. Okay. So anyway, that's my time today, guys. Check me out on Monday when I'll be back with Monday Fun Day, Business Funding Now. Like, follow, share, and I'll see you on Monday. Have a good weekend. Thanks. Peace.